Hey, tech enthusiasts. Welcome to your Wednesday edition of the Tech Stocks Daily Podcast, where we break down the buzz in the tech world. Today, we've got a roller coaster ride lined up. DXC Technology facing a triple hit of securities fraud lawsuits. Fortinet snagging a stellar deal with Juventus, but raising eyebrows with unusual bearish options activity. Zoom flexing its financial muscles with stellar cash flow stats, and Intapp lighting up analyst predictions with soaring earnings estimates. Stay tuned. This one's packed with twists, turns, and stock moves you'll want to know about. Let's dive into the spicy stew that DXC Technology Company finds itself in today. Buckle up, folks, because today's headlines are not flattering for DXC, but they are undoubtedly crucial for investors to know about. First up, the Gross law firm sounded the alarm, rolling out the welcome mat to investors who bought DXC shares during a specified class period. Why? Because DXC is being accused of securities fraud. The allegations include some pretty hefty claims, misrepresenting their transformation journey and their ability to integrate previously acquired companies and business systems. Essentially, the lawsuit claims DXC was putting on a facade. They allegedly deferred restructuring and integration costs, which look great on the balance sheets in the short term, but are presenting potential long-term consequences for shareholders. Investors were being serenaded with tales of triumph and efficiency that might have been, well, a bit off-key. But wait, it gets steamier. Next in the queue is the Shaw law firm. They also hit the news, encouraging investors to lead a class action lawsuit against DXC. Here's the kicker. They dragged violations of the Securities Exchange Act into the mix. The Shaw law firm straight up cries foul on DXC for tossing out false and misleading statements, revealing the company's convoluted cost-cutting gymnastics. What they seemed to be saying was akin to, hey investors, look at how efficiently we're reducing costs, when in reality they were just sweeping those expenses under the corporate rug. Now, if you think two law firms jumping into the fray wasn't dramatic enough, enter Barrick, Rodos and Bassin stage left. This third set of legal eagles announced a class action lawsuit too. They ripped DXC a new one for allegedly misleading investors from day dot, especially regarding their transformative journey. The plot thickened on May 16, 2024, when DXC dropped a bombshell. They admitted to falling short of their restructuring and integration promises, needing an extra $250 million to get their structural house in order. The investors' collective eyebrows shot up, and the market's reaction was swift and brutal. DXC's share price plunged almost 17% after that revelation. Imagine dropping from $19.88 to $16.52 per share practically overnight. What does this all mean for you, the savvy investor or tech enthusiast? DXC's public image and stock value are on a precarious ledge. These lawsuits could potentially lead to significant financial repercussions for the company. If you've got skin in the DXC game, reaching out for more details through these law firms might be in your best interest. And let's not overlook that hefty October 1st, 2024 deadline looming over all prospective plaintiffs. Keep those dates on your calendar highlighted with a fluorescent marker. Each law firm mentioned wants to gear up investors, and if you're a DXC shareholder during the class period specified, you definitely want to be part of this conversation. So, with DXC's fall from grace turning into a legal popcorn fest, investors are finding out the hard way that not all that glitters is gold, or, in this case, not all that transforms is beneficial. Stay alert, stay informed, and for heaven's sake, don't hit snooze on those legal notices. DXC's drama might just be the cautionary tale tech investors need to be glued to right now. Hey tech enthusiasts. Fortinet has been making quite the splash in the tech news wave today, hitting headlines for a couple of super interesting reasons that are bound to turn heads. First up, let's talk about the unusual options activity around Fortinet. You know things are heating up when the whales, that's Wall Street speak for the big fish with significant funding, start taking an interest. And in this case, they've adopted an unusually bearish stance towards Fortinet. Specifically, about 60% of the options trades walked into bear territory, while only about 20% came in bullish. When you break it down, there were 10 trades grabbing attention, 2 puts amounting to $60,800, and 8 calls reaching a whopping $407.25. What makes this even juicier is that the whales have been eyeing a price window ranging from $65 to $80 for Fortinet. That's like tracking your crush's social media for subtle clues, but with stock prices. Examining the volume and open interest of these trades paints a clear picture of where the pros think Fortinet is heading. And let's face it, options trading is not for the faint-hearted and helps read the signals perfectly. With more risk comes more potential, and apparently, the big pockets think they've pinpointed the sweet spot. Now, let's flip over to Fortinet's second juicy tidbit. The cybersecurity heavyweight has just inked a deal to become the official cybersecurity partner for Juventus Football Club. Ahoy! This isn't just a run-of-the-mill sponsorship deal. We're talking about Fortinet implementing its cutting-edge solutions across Juventus's facilities, including their headquarters, Alliance Stadium, and even the first-team training center. Imagine your best defense in a heated football match. That's basically what Fortinet is promising Juventus in terms of cybersecurity. Even the FortiGate next-generation firewalls will be in the mix, ensuring no cyber attacks breach Juventus's meticulously fortified walls. On top of this, Fortinet is riding high from recent acquisitions, notably NextDLP and Lacework. With these buys, Fortinet has bolstered its game in data loss prevention and cloud-native application protection, absolutely essential weapons in the never-ending war against cyber threats. Couple this with their enhanced OT security platform, and you need all cyber foes to take cover. Let's not ignore the competition, though. Fortinet is up against titans like Cisco, CyberArk, and Palo Alto Networks. But guess what? Fortinet is flexing stronger gains year-to-date compared to these rivals. 29.1% up, outperforming the tech sector's 22.5% growth. Talk about a hat trick. So there you go, folks. Bearish options activity spicing things up on one hand, and a high-profile partnership with Juventus, plus prime acquisitions lighting up the future on the other. Whether Fortinet is dribbling a slick move through fortifications or putting up a defensive wall, you definitely can't take your eyes off what's happening next. Stay tuned. Hey tech aficionados, grab your digital seat because today we've got some spicy news about Zoom. Yes, the video communication giant that turned "you're on mute" into the most widely used phrase of remote work. So what's the buzz? Zoom Video Communications just spilled the beans on their financial results for the second quarter of fiscal year 2025, and let's just say they're flexing some serious financial muscles. Eric S. Yuan, the company's founder and CEO, didn't hold back on the celebratory vibes either. The key takeaway? Zoom's financial performance went beyond expectations, boasting a whopping 33.7% growth in operating cash flow and a notable 26.2% uptick in free cash flow year over year. If cash were calories, Zoom just completed a marathon without breaking a sweat. One of the standout highlights is Zoom's success with large accounts. Customers bringing in more than $100,000 in trailing 12-month revenue increased by 7.1% year over year. That's no pocket change, folks. It's clear that big spenders are putting their faith into Zoom, making the company a heavyweight in the business communications ring. Additionally, Zoom's online business saw resilience like never before, with their online average monthly churn hitting its lowest rate ever. It's like they found the secret sauce to keeping customers glued to their platform. And it doesn't stop there. Zoom Contact Center landed its largest single order deal to date. Yes, you heard that right. This is a massive feather in their cap, spotlighting their appeal for major customer-facing deployments that leverage advanced AI features. It seems Zoom is not just a video call service anymore, but is evolving into a comprehensive customer engagement hub. Yuan is probably doing a little happy dance right about now, and who can blame him? But wait, there's more. Zoom also gave a sneak peek into their financial outlook for Q3 and the full fiscal year 2025. The guidance is ambitious, but given their Q2 performance, it's no leap of faith to believe they will hit those targets. Interesting side note, the EPS and share count figures won't include the impact from the $1.062 billion of authorized share repurchase still on the table as of July 31st, 2024. Needless to say, Zoom seems well poised to keep their upward financial momentum. So how did they dish out all these details? Through a press release filled to the brim with bullish, forward-looking statements and a gaggle of financial terminologies that would make a Wall Street analyst nod approvingly. Also, a friendly heads up, they have a Zoom video webinar scheduled for today, where investors can tune in to get more deets from the Zoom's mouth. In a nutshell, Zoom's latest report paints a rosy picture of efficient growth, smart customer retention, and expanding horizons. Whether you're a tech enthusiast or an investor, it's hard to ignore Zoom's ongoing transformation from a pandemic darling to a versatile communications powerhouse. Cheers to Zoom for keeping the innovation flames burning and for proving that the sky's truly the limit when you're virtually connected. So, what's on your agenda for the next Zoom call? Because for Zoom, it looks like the future is calling, loud and clear. All right, tech enthusiasts, gather round because today we're diving into why Intapp, ticker symbol INT, is making waves on the Nasdaq. So what's the buzz about Intapp? Well, this software developer is on a roll. Analysts are increasingly optimistic about their earnings outlook, and this newfound enthusiasm is driving stock predictions up. Imagine those infamous earnings estimates as balloons, and analysts are pumping them full of hot air in the best possible way. Check this out. Intapp's expected to earn 13 cents per share this quarter, which is a sizzling 116.67% increase from the same time last year. Over the past month, we've seen 2 positive earnings revisions and 0 negative ones. This has bumped up the Zacks consensus estimate by 9.8%. Full-year projections are equally promising, with earnings estimates pointing to 62 cents per share, a 37.78% hike from the previous year's numbers. Why are analysts so giddy about Intapp? The company's doing something right, so right that the typically skeptical herd of financial analysts is in rare agreement. The revisions upwards aren't just hopeful flukes, they're part of a steadfast trend. In fact, over the past month, 6 analysts have raised their estimates versus just one lonely pessimistic downgrade. This 32.09% spike in annual earnings estimates has given Intapp a solid Zacks rank number 2. Quick refresher on the Zacks rank, it's a 5-notch system from number 1 to number 5, and stocks ranking in the top 2 positions have historically trounced the S&P 500. So it's like earning gold star status in the stock world, a sort of teacher's pet if the teacher were an objective algorithm calculating financial success. While Intapp stock has already climbed 14.6% in the last 4 weeks, signs point to more room at the top. So, If you're looking for a stock to add a little sparkle to your portfolio, Intapp might just be your golden ticket. But hey, that's my take. What about yours? I'd love to know what you think about Intapp's bullish trajectory. Do the rising estimates make you want to click buy faster than you can refresh your browser? Or do you think the hype train might derail? Drop your thoughts in the comments section below. All right, my tech-savvy tribe, that wraps up today's deep dive on Intapp. Whether you're tossing it into your portfolio or watching from the sidelines, keep those investment strategies sharp. Till next time, stay savvy, stay quirky, and remember to hit those notifications for your daily dose of tech insights. Go on, splash those thoughts and lurid predictions in the comments below. Let's keep this conversation buzzing. All right, tech enthusiasts, let's zero in on one stock that's riding the news waves today, Fortinet. So with all the juicy details coming to light, you're probably thinking, should I buy, sell, or hold on to my Fortinet stock? First, let's break it down. Fortinet has made some big moves recently that could influence your investment strategy. The notable partnership with Juventus Football Club is a power play, showing Fortinet is leveraging its cybersecurity acumen right into the sports arena. This kind of high-profile collaboration is a huge feather in their cap and could open more doors for similar deals. Plus, the recent acquisitions of NextDLP and Lacework enhance their capabilities in data loss prevention and cloud-native app protection, positioning them strongly against cybersecurity threats. However, hold your horses. The unusual options activity paint a somewhat ominous picture. Around 60% of the trades are bearish, indicating that the big money players, the whales, are betting Fortinet shares will dip into the $65 to $80 range. This could be a hint of volatile times ahead. Options trades can often be a canary in the coal mine, alerting speculators of potential downturns or instability. Now, considering both sides of the coin, here's my gut feeling. Hold. Why hold? While the bullish news of deals and acquisitions showcases Fortinet's promising future trajectory, the bearish options activity suggests caution. If you're already an investor, holding allows you to ride through this wave of uncertainty and see how these strategic moves and market sentiments play out. You want to avoid a knee-jerk reaction to options activity, especially if you're in it for the long haul. Always remember, though, this is just one opinion in the vast sea of the stock market. Do your own research, dig into the numbers, and as always, consider your personal investment strategy and risk tolerance before making any moves. Got thoughts on Fortinet? Drop your comments below. Let's debate and power through this together. Happy investing, folks. All right, folks, there you have it. Today's Nasdaq roundup had it all. DXC Technology caught in a legal whirlwind, Fortinet making bold moves while facing bearish sentiments, Zoom flexing its financial muscles, and Intapp riding high on analyst optimism. As always, it's a wild ride in the tech world. If you enjoyed today's scoop, don't forget to like, subscribe, and share this video with your fellow tech enthusiasts. Hit that notification bell so you won't miss tomorrow's hot updates. Stay savvy, stay connected, and keep those comments buzzing below. Catch you all tomorrow for another action-packed tech news briefing.